Hey guys, it's a market update. Look, it's happened, right? Absolutely for certain at this point. So we had the new all-time high. You had the sell-off and the test that came into previous resistance levels. You turn that into support. You've now broken through for 2 months. So from this low, you had a recovery and then a kind of breakout of this level. So we're coming into the new all-time high. Mixed sentiment, because I think as we break this level, as we break the kind of 80 level, you're actually going into the mature end of the bull market. And mixed sentiments there, obviously, because then we have to actually start turning a little bit cautious, because when the price is up here at these levels, you know, that's typically the end of a bull market. And then you're actually looking forward. This white line right here is typically when Bitcoin tends to top out after a halving, right? So we've got a long way to go, right, in terms of time and price, but everything is shaping up. I mean, everything is here. You have the sentiment changing, right? You have the price action showing us that buyers are coming in wanting to pay higher prices because they believe the price is going up in the midterm. And you have the on-chain telling us we're nowhere peaked out in this bull market yet. Everything is here, right? You just have to remain long. That's what I'm telling myself anyway. It's time to be long. And people are obviously starting to come back into it. We are also in that time of the year and that time of the cycle where things happen. It's all lined up. So this is an important time. I'm going to be making some updates for the Crypto Investor course. If you've got the course there, it's completely free for you. The price does go up when I add new content. So if you want to get in now, check the link down below. If you do trade crypto as well, check out Bybit. I trade on here up to $30,000 as a deposit bonus. If you are new, you can check the link in the description for the details. I just think it's really, really important. I'm telling myself this, right, as well, is you just have to remain long this asset. This is the asset of our time, right? And the only way you fumble it is if you sell it, because it's just absolutely every year, right, going up in value. Now, I know it's very, very volatile. I get that, it's volatile. It's not though, is it? Because if you look at the 200-week moving average, which is the only thing an investor looks at, right? So the way you muck this up is trying to be clever and trade, right, around these moves where you just have to be long. The 200-week moving average is over 40,000 now. My kind of 10-year view is that it goes up around 40%, 30%, 25%. This is the price for the moving average, right? Not the actual market price, which could wildly fluctuate around this. Could go up to 200K, could go back down to 50K, right? Up here, if the moving average is at 350K, the actual price could be 700K. If you look at the price, because we're in a massive uptrend over time, the price is always above the moving average. But as an investor, your price is more or less the moving average, right? So that's really what you want to be looking at in terms of how the actual thing moves over time. And the price could be above or around that, right? It never usually goes below this. And if it does, that is just absolute must-buy territory. But look, we're in a good position. You just have to be long this asset, certainly now. And I'll show you some on-chain data, because at this price, the market side of things, the short and mid-term side of things, starting to get, right, really bullish, because people are starting to think, wait, what's going to be happening over the next 2 to 4 years? The election's pretty clear at this point. What's going to happen? Obviously, you're going to have to wait for that. Could we get a sell the news after? Maybe. Again, don't muck it up. Just stay in and be long this asset, because it's in a massive bull run. 15 years, the next 15 years, right? This is the asset to own. So it doesn't matter where we are right now, but we're still kind of midway through a bull market. There's still a long way to run. Until the price gets maybe a little bit overdone in relation to its longer term trend. So look, for right now, really, really good. Everything's turning, and the on-chain, which I'll show you right now, isn't actually overdone, which again, just shows us that it's actually just time to remain long. The season that we're in now is typically very good for risk assets. And we've got a few things lining up here. So both short term, seasonally, but cyclically, everything is usually pretty good about this time. So November to April, 6-month period, usually very good. Average change is 7% to the upside, and it's higher 77% of the time. This is for the S&P. Bitcoin and S&P aren't really correlated that much. Sometimes are, sometimes aren't. But risk on, assets going higher, Bitcoin likes that, right? And so we're in that time. So this seasonality is very good for us right now, November to April. But then you have cyclicality as well. So the macro situation just absolutely perfect for Bitcoin, right? You have essentially 2 of the 3 major blocks, right? So US, Euro, China. China stimulating, Euro needs to do that. And they're just kind of waiting for the US to get through the election and see what they can do there as well. Because the US benefits if these guys are stimulating some sort of economic activity as well, right? So it's all linked. They're just kind of waiting right now until after the elections. But around this time is usually when people actually start to say, right, we know who's going to be in, we know what the policy is, let's do business. And the banks, they start to create more credit, which is obviously debasement of currency because more currency units flying around. That's good for risk assets, right? So this is where we are. Seasonality, cyclicality, all lining up. Bitcoin cycle as well. We can see here, we have just broken out of this level. So again, this is Bitcoin cycles, each of the bull markets. This metric right here starts to break out. And so we are doing it yet again. Like I said, everything is lining up for a very good run. Bitcoin cycle, extreme oscillators. What's great here is that we are not peaking yet, right? Which is why I just think you have to remain long, because these kind of cycle peaks, these are areas where you actually have to start to think, okay, is Bitcoin kind of overdone, right? Is it towards the end of that cycle? We're nowhere near that yet, right? Nothing is showing up here. So we are definitely in a bull market. Prices are much higher, but they're not peaking out according to extreme oscillators. Long-term holder SOPA, again, you can see, if I get my head out the way, you can definitely see we've recovered, but we're not at the peak of a bull market. Peak would be somewhere up here, and we're just not there. We had this peak, and we had this peak. We're just not there. So again, you know, it's very, very bullish because we're in a bull market. You can feel that. You can feel the sentiment changing, but Bitcoin isn't peaking out. So we have to remain long. And again, AVIV ratio, it's the same sort of thing. So again, we have recovered. That sell-off, brilliant time to buy, and I think we move higher at some point. When we get up to these levels in AVIV and all the other indicators, MVRV, you can see that. That's when you have to start thinking, okay, do I need to make sure that I'm okay for the next 2 or 3 years if there is another drawdown in the price? So that's what I want to go over in the crypto investor course update. A lot of people have been asking for that sort of strategy. So I'm going to update those videos in the next couple of weeks. Sticking on the theme of cycles as well, just a couple of more data points here that just, you know, all point towards a very positive 12 months to come, 6 to 12 months. Now, like I said, mixed feelings, because in 6 to 12 months, then you're looking at potentially another drawdown in all of this stuff. And so very, very important time. But for right now, you know, I just think I have to remain long here. Credit cycles, high yield credit cycles, you can see as we inflect to the upside, just means risk taking is coming back, right? Central banks are probably trying to lower rates a little bit, which they are right now. You can see China's doing it, Euroland's desperate for it, right? So they can't really move massively until the US helps them out and drops rates there a little bit as well. Because if they're dropping rates fast versus the US, you get rate differentials, it's no good for your currency, etc. So all of these central banks are in cahoot, but you can see them slowly just coming down with rates, right? So that's the central bank cycle that then fuels, hopefully, private credit creation as well. High yield credit starts to get bid up, as you can see here. So this move, good for BTC. As the high yield credit cycles draw down, that's a bear market. Bull market here, we've had the bear market, we are starting to climb out of it. So again, mid-cycle, right? Very positive because you can see the trend happening, but we're not at the peak yet. We also have this global M2, again, you can see. So global M2, it's money supply, right? Bank money supply, global deposits, etc. As this inflects to the upside, that's a Bitcoin bull market as we draw down. So again, inflection to the upside about halfway through what would a typical cycle would be. Typical cycle, Bitcoin has that growth. And so just super positive about where the next 12 months is going. The crypto investor course update will be coming in a couple of weeks. If you do trade, check out the Bybit deposit bonus down in the description below. I'm James, this is Money ZG. Cheers for watching, and I'll see you in the next one.